Welcome back. Hope you're having a good morning. For starters, the SGX Nifty suggesting a 25-point bump up the last time we checked. So a bit of a green start. Oh, it's tapered down those expectations now. Maybe we're bracing for more or less a flattish start. Prakash Diwan, market expert, joins us on the show. Morning, Prakash. Well, we'll be talking about HDFC Bank in just a bit, but I wanted your view on Avenue Supermarts. Those numbers appear disappointing. I'm looking at a couple of brokerage notes. There's a multiple scale back. There's an EPS cut as well, and it's never traded cheap. What's your view on the stock from here on?
Good morning, Nigel. So I think what's going against this name is the valuations. If you put the numbers in perspective in terms of how it translates or how the revenue stacks up with the margins, given the fact that there have been higher cost pressures, you'll realize that the footfall is also not as strong as the pre-COVID times, right? So it's not made a full comeback of sorts. Given the fact that in these last 2.5 years, you've also seen a huge penetration and spread of the online buying or shopping habits within people. So the entire way people shop groceries and some of these non-discretionary products, which Avenue looks at, is very different. So, that entire thing is changed, and the cost pressures will probably a bit at some point in time. And I'm not too sure. If you look at the fine print, you still can't make out what's led to that. But typically, given the fact that they are more resilient than a lot of the retail players, you could have a Jan, Feb, March quarter, which is not looking as bad. So are you going to, up the estimates again? My answer to that is probably it's the valuation discomfort that has led to this sort of a cut in expectations. But I would give it one more quarter to call out whether there's a decline or a secular trend that's going to be far more, longer term for any kind of a thing. But of course, it's expensive. It will have to take the burden of disappointments on the price. But at some point, you'll see some sort of a turnaround and a relook at the price as well.
Okay, what about HDFC Bank? We will be, talking about it at length with our next guest. But wanted your thoughts as well.
Yeah.
Very strong all-round beat in earnings, NI growth of almost 25%. I think there was a little bit of a hiccup as far as the agri slippages are concerned. That was a bit on the higher side. But do you see the valuation gap now narrow between its peers like ICICI Bank?
Good morning, Sonia. So yes, that's the most relevant thing you need to look at. Given that the improvement in margins and all has been fantastic and after a fairly long time. And they've been investing into the business, so this could probably continue. I don't think this is so much of a one-off. The impending merger is probably the only, I would say, unknown of sorts in terms of how the market would respond to it in terms of the post-merger stacking up within portfolios. And my guess is it'll probably be much bigger because between the new HDFC Bank or the future HDFC Bank and Reliance, the kind of weightages that you have is significant, going to be significant in the Nifty itself, maybe about 24%, if I remember correctly. And that means that a lot of the money which ETFs will bring in as and when the season changes favorably, HDFC Bank will probably see a re-rating in terms of the PE multiples or the price-to-book multiples. At this point, it's inexpensive. The business looks promising. But it's just that if you want to play with that merger uncertainty is the question. So I'm sure when we hear Kajal after this, we'll probably be able to figure out much more in terms of the internals. But I'm quite positive on this, but I would give it some time to buy into the portfolio.
Prakash, hi, good morning. And yeah, we'll talk about HDFC with Kajal as well. Just two names from Friday and your thoughts. One is MCX, which saw a large move higher. On the back of course, that announcement from SEBI, more than one contract to commodity. The second is LTTS, which sold off by close. It was down 5.5% off the lows, but it was a sharp cut. Go on.
Yeah, good morning, Mr. So LTTS will have to clarify, justify, do a lot of explanation in terms of what's so great about this acquisition and why was it done now. And it's something where the minority shareholders might not like, given the fact that their business is far more bigger as a platform than just a small business that they've acquired for a fairly decent consideration. So I think till then the market will probably wait before deciding on the fate. On MCX, I think, Vishant, it's very simple. You are looking at an expansion of the business potential that this exchange can do. I mean, you're increasing the SKUs, if I may use for people to participate, and it's always good. It creates much more depth and breadth in the market for these products. The only overhang is, of course, the 63 moons this thing. So when you have that moon rise is the question. So if that doesn't kind of become a bummer, you at least know that this is going to be secularly, it's going to be positive for the exchange. There are reports which probably don't look at it very favorably, but my sense is it will be positive, if not immediately, in the medium to long term. And the exchange will probably come back in its own of sorts, which it hasn't been performing for quite some time because of various reasons. So I'm positive, but with a little bit of a dosage of patience and this thing thrown in. I mean, you don't expect any fireworks right away.
Okay, all right. Well, stay on. We do have an analyst joining us who tracks HDFC Bank very closely. So let's get her on board. Kajal Gandhi of ICICI Direct is with us. Kajal, good numbers coming through. Asset quality trends are benign. And, continuous growth in deposits of 20%. Very good increase in branch count as well. The only question now is that does it narrow its valuation gap between its peers? What's your own analysis of how to approach HDFC Bank?
So considering this result, they have posted strong numbers, as you also mentioned. And what we need to see is that whether they are able to improve now onto the CASA also, because the growth in deposits is good, and I think they are doing it for a couple of reasons. One is their own growth, as well as with merger into HDFC Limited, they will need more deposits and replacement of borrowing. So I believe deposit growth will be continued. We will need to see how much it impacts currently on CASA and the growth on CASA for the future. So thereby margins will also need to be seen accordingly. And second thing, I think when we are talking about valuations, they have already reduced a lot over time. With HDFC Limited merger, I think the post-merger numbers are looking valuation-wise less than around 2.1 times forward on FY25 basis, so which is also quite cheap. So I think definitely there is scope for post-merger also, multiples going up. We should see, I think, a 2.4 to 2.5 times on the bank post-merger, and then the subsidiaries adding up. So I think valuations have a good gap and they should gradually start narrowing. Couple of maybe more approvals which we are waiting from the regulators, the NCLT and the RBI, couple of things which we are waiting. I think those are the only things which have held that.
Yeah. Kajal, margins were kind of flattish. Provisions dropped and, earnings looked up. I mean, the numbers themselves are, I think the corporate book was down a little bit. The numbers themselves, no problems at all, right, Kajal?
Yeah, no problems. I think people would have expected with the sharp rise in the NII that was seen, because NII growth has beaten expectations across for even after the IT refund thing. So there may be some expectation on I think the NIMs should have marginally gone higher, but I think they haven't gone up. So we should think that once the liabilities reprices, they won't fall also. So they are, I think, building in stability of margins, which should be, I think, read from this.
So you said that the multiples can go up further post the merger. I mean, post everything coming through. Would you raise your earnings estimate and target price on HDFC Bank post these numbers?
So yeah, possibility is there. We have also even raised in this, considering these factors only, that the numbers have continuously now last 3-4 quarters giving strong indications that there are no concerns on the growth front. So I think currently also we have raised the target from 1750 to around 1920, valuing around 2.7 times. Post merger also we believe we will value around 2.4 to 2.5 times, and if the stock further rallies, there will be scope, yes, for further upsides.
Okay, all right. Thanks a lot, Kajal, for stopping by and giving us that quick analysis on HDFC Bank. Going by the analysis and the broad feedback that we've got, that stock should be opening up well in the green today. Well, from banks to tech, Wipro reported what was a mixed set of numbers in the third quarter. The revenue growth missed estimates. However, the margins were a little over what the street was working with. Deal wins, though, were strong. Let's listen in to what their CEO had to say post their third quarter numbers.
As we are looking into Q4, what do we have? We know there is a certain level of uncertainty in the economy. The macro environment is showing a certain level of volatility. In some industries, more than in some others, we know that, for example, a sector that has grown tremendously in the past, the tech sector, is more suffering at the moment, and that's a fact of life. It's a reality. But in this context, what's actually very visible for us is that we continue to win in the market. We continue to win deals. What we are observing also is that there is a little bit of a delay in the way ramp-up happen in the new large deals, in the new larger deals, I would say. And this, a little bit of a lag, is creating a certain level of the time difference for us in terms of ramp up and projection in our business. There is also, I think it's fair to say, that there is certainly a certain level of volatility around discretionary spending.
Okay, all right. Well, Prakash, what's your take on Wipro? The revenue growth was a little lower than what the street was working with. It's the lowest among its peer set as well. The margins were a little bit better. What's your take on the stock?
So, Nigel, I don't think there was anything inspiring about the numbers. And I would attribute the improvement in margins, comparably with the other players, given the fact that it didn't have any additional cost impacts because of the nature of work that they do, larger contracts that they've been serving for the last many quarters now. But interestingly, if you read between the lines in the commentary when the CEO said that discretionary spend is seeing a lot of volatility, there's a degree of volatility. I mean, it's a nice way of putting the fact that volatility is always a precursor to a slowdown, right? So, I mean, if there is volatility in decision making on discretionary spends, eventually you'll probably see a little bit of a cut there, and that's going to be reflecting in the subsequent quarters. And then guidances also don't really make you feel that the stock needs to get re-rated very majorly and very quickly. So if things happen, if the improvement happens, I'm sure it'll be discernible. So no hurry to buy into this stock at all after these numbers.
Okay, we have a very long week coming up, Prakash, and so do you. Your Friday is going to be extended with Reliance's numbers. But what's the expectation this time around? Anything that you're looking forward to, and how are you positioned in general on the stock?
So, Reliance is, in fact, I did mention while we were talking about Avenue Supermarts, one of the reasons where Avenue has been hurting also is the strong presence and, translatable sales revenue growth that Jio is clocked on the retail side. And that is something which will continue to march ahead. We've seen that happen in the last couple of quarters. So my expectation is it's going to be another quarter where they'll probably end up firing on all cylinders. The 5G rollout has possibly, I'm not too sure when that would have impacted in terms of the full quarter, but the rollout could have probably seen a little bit of a slowdown in terms of the push on the telecom side revenue build-up. But barring that, I mean, you have everything in place on the oil and gas, chemicals vertical and the retail vertical and the telecom vertical. So expecting decent numbers. In fact, it now represents one of the best bets if the Nifty were to revive its journey towards, previous highs post the budget maybe. But it definitely is poised to structure itself in terms of the business, the revenue contribution from all its verticals. And the 5G investment rollout is what you need to look at in terms of the capex and the borrowing. So interesting week, and I'm sure Reliance will reward shareholders as usual from a quarter that's possibly gone well.
Okay, well, I do want to ask you your views on plenty of other stocks, L&T Finance as well. The disbursals were quite strong over there, but we'll do that in a bit. Prakash, just stay on. Before we slip into a break, let me tell you what's lined up in the next half hour of the show. We have Anuj Singhal that comes in